A word of caution in this video, and I'm going to cover this in a lot more depth in my report this morning. Um, I am not convinced that we have completed this volatility event. I predicted, we were going to have at least one, maybe a couple of these before what I think is the bubble phase in the stock market is over. Um, the recent move down into put this on the daily. This recent move down into the daily cycle low, the market was clearly starting down into a larger degree intermediate cycle low, but we had the Fed meeting right here. And this just happens before basically every Fed meeting. The Fed intervenes in the market. If we're in a corrective mode, they stop that and they push the market back up. So it's either moving up or at all-time highs, and it just makes their decisions much easier. The Fed doesn't want to do yield curve control unless they absolutely have to. They can't cut rates anymore, so they really don't have any bullets left in the gun except one, and they don't want to use that one unless they absolutely have to. So the market, this decline, which should have run deeper, it should have broke below this daily cycle low here. It should have retraced at least 38% of this rally. That would have completed a true intermediate degree correction, and then we could start the advancing phase of the next intermediate cycle, but that was cut short, was aborted prematurely. The market was pumped back up in time for that FOMC meeting, and now I think we're left with unfinished business. This daily cycle is starting to get mature. Now I will say we've probably gonna bounce here. Well, we are bouncing yesterday, and we may continue to bounce on Friday. But as this daily cycle gets more mature, the risk gets greater every day that we're gonna, that we're gonna have to go down and complete that ICL. And the fact that the Fed prevented that from completing right here probably means this is going to be worse than it would have been if they would have let the market just finish that correction naturally. So I think we're kind of in a day trading market. If you want to trade any kind of long position or a bounce in here, it has to be very short term. You're going to have to be in and out quickly, and make sure you're out of the way when this daily cycle starts to decline in earnest into the next daily cycle low, because I think it's going to turn out to be a true intermediate cycle low, which means it probably has to break this daily cycle low right here and form a failed intermediate cycle. So again, I'll go over this in a lot more detail in my report that is going to be out this morning, and I'll put the link in the description below for anybody that wants to sign up for the newsletter and read that report. But I think caution is paramount right now. If you're trading from the long side, I think it needs to be very short-term trades, day trades probably at the most, in and out, and make sure you're out of the way when this daily cycle starts to accelerate in earnest down into the next daily cycle low, as it's probably going to be a much bigger decline and qualify as a larger intermediate cycle low as well. And finally, we'll finish this volatility event that's been going on for a couple months now.